August's inflation numbers are the standout tomorrow morning as the final CPI reading ahead of that all-important September 21st meeting. Could it derail the rally? Let's bring in Yahoo Finance's Ines Ferré, who's watching all the market action for us this morning. Ines.
Akiko, and it is all about inflation this week. That CPI print that you just mentioned that will be coming out tomorrow, the headline CPI, economists are expecting that to come in at 8.1% for the month of August on a year-over-year basis. Now, remember that in July, the CPI print came in at 8.5%. So on a month-over-month basis, this would be a decrease, and it would be the first decrease since May of 2020. As far as core CPI, that's excluding food and energy. Economists are expecting that to have gone up to 6.1% in August on a year-over-year basis. July was 5.9%, so a little bit of stickiness there in that core CPI. But of course, this reading tomorrow could be crucial to what the Fed decides to do on September 21st, whether to increase interest rates by 50 basis points or by 75 basis points. Another key point I also want to mention is the PPI, Producer Price Index. This is what producers get paid for their services and goods. That will be coming out on Wednesday, and economists are expecting to see a bit of a cool down also on a month-over-month basis for that PPI print, Akiko.
And as we're also seeing global oil prices pushing higher as talks over an Iranian nuclear deal appear to hit some obstacles here. Certainly not the only thing affecting prices. What are you watching?
No, it's not the only thing affecting these prices. And in fact, I'm going to pull up the oil chart right now so we can see WTI and crude. So WTI heading for its third session of gains. We are seeing a little bit of a weaker dollar, so that is supporting commodity prices because crude is quoted in U.S. dollars. Also, you've got the release of the strategic petroleum reserves, which are ending this fall. So that also is supporting a little bit of higher prices. And then you've got the natural gas crisis that's going on in Europe. So you are going to be seeing demand for diesel, for heating oil. These are derived from crude oil. So this is all supporting crude oil prices. UBS also, Kiko, came out with a note today basically saying that they still see, despite the lockdowns in China, they still see supply tightening. So they are expecting prices to climb in the months ahead. But just to note on what's happened with, for example, West Texas Intermediate over the past year, you can see these June levels were when WTI was at $122 a barrel. Right now it's trading at 87, down about 30% from those levels, Kiko.
Okay, never a dull day in the energy markets. Ines, thanks so much for that.